Hey, it's Dan Moralez, and this is Homebuyer Radio, episode number 70. And lately, we've been talking about construction loans, right? In the last couple of weeks, we talked about down payments that you can kind of expect to see if you're going to build a house on a construction loan, and then the different types of construction loan options, whether it's a construction-only loan or a construction permanent loan. This week, what I want to talk about is what your monthly payments are during the course of a construction loan, okay? Now, this is typical for what most lenders do. Now, you can start to see variations from lender to lender when it comes to this part of the construction loan project, okay? And what I mean by that is there are some lenders that will actually build what's called an interest reserve into your construction loan. And basically what they do is they fund your interest payments out of the construction loan. That typically means that you'd have to have, in most cases, a little bit larger down payment into it for this reserve to be able to be built into the loan. Sounds like a tongue twister there. We don't do that, right? Most of the lenders that we compete with don't do that either. Typically what happens with a construction loan is your payments are interest only during the course of construction, and those interest only payments are based on the amount of the construction loan that has been dispersed, okay? So let's just say you had a $400,000 construction loan, and at the time you closed on your construction loan, $50,000 was dispersed to purchase the land, okay? That means that you would have an outstanding balance of $50,000 on your construction loan, and that is what your interest would be based on, okay? During the course of construction, you generally have a construction term in which the house has to be built, okay? It can vary in different parts of the country and from lender to lender, but that's probably anywhere from 6 months to a year, meaning that the house has to be done within 6 months to a year. And, done is usually defined by being able to get a certificate of occupancy from the city or municipality where the house is going to be located, and then having the appraiser do a final inspection that says that the house has been completed according to the plans and specifications that you provided to the lender. We'll talk about the appraisal process for new construction next week. That's actually a really good topic now I'm thinking about it. But this week, we're just talking about the payments during the course of construction. So while your house is being built, you're typically paying interest only based on what's been or what the outstanding balance is on that loan during the course of construction. So if $50,000 went out the door for the land when you close on your construction loan, that is what you would pay interest on, okay? You typically are only paying interest on the outstanding balance for the length of time that those dollars were outstanding. Now, once the builder takes a draw, and a draw is when the builder requests money, if you will, from the bank to go towards the completion of the house, okay? So when you hear the term construction draw, that's what it is. That is the builder coming to the bank and saying, hey, we need money to pay for the work that's been completed on the house. When a builder takes a draw, typically what's going to happen is the bank's going to go through, they're going to disperse the money to the builder. The builder's going to turn around and pay the subcontractors that have done the work on the house and good stuff like that. But as those dollars go out the door, your balance on your construction loan grows. And as the balance on your construction loan grows, so does the required interest payment that's on your construction loan as well. A lot of times clients will ask me, well, hey, Dan, what are my payments, going to be on my construction loan? Well, unless your builder has a very set and specific draw schedule, it's really hard to tell you exactly what your interest payments are going to be because I don't know what the builder is going to draw or when they're going to draw it. I can typically show you how to calculate it. And keep in mind that during the course of construction, those payments are interest only, right? So it's just an interest only payment. So that means that you're not paying any principal, you're not paying any taxes, you're not paying any insurance or anything like that, and you're only paying for the dollars that are outstanding, not for the entire loan balance. So that means, at least initially, that dollar amount's going to start low, and it's going to gradually step up as the house is going to get completed. And then you wouldn't start to make a full payment of principal and interest with taxes and insurance or any of that stuff until the house is completed. So during the course of construction, payments are just interest only during that construction phase. Once the house is done, at that point in time, you'd start to make a full payment of principal and interest based on, your total loan amount that you took when it's all said and done. So that's a very quick, simple kind of explanation. I would tell you, if you are going to go through the process of building a house, you want to make sure you understand the specifics from your specific lender, right? If you are fortunate enough to live in one of the states that we do construction loans in, we would love to help you, right? And you can, you can contact us, and we'll kind of walk through the scenario with you of what to expect in a little more detail. But that gives you just a quick understanding of what the payment process is during the course of construction. You're typically paying interest only based on what the outstanding balance is, and then at the point where the house is completed, at that point in time, you'd make a full payment of principal and interest, and then that would also include any taxes and insurance or potentially mortgage insurance, if those are all parts of your particular construction loan. Okay, my name is Dan Moralez. NMLS number is 709729. My phone number is 616-931-4629. You can find me on the web at danmoralez.com. Again, DANMORALEZ.com. You can find a ton of information about construction loans on my website. If you hit that website and just click on the Build tab, you'll see all the states that we currently do construction loans in, as well as a bunch of additional information in regards to construction loans. So take some time, check that out, and feel free to reach out to us if you have questions or concerns. And just a reminder that Northpointe Bank is an equal housing lender.